CPI. Did the markets care? It's Wednesday, September 13th, 2023. This is Overtime. I'm your host, Chris Vecchio, head of Futures and Forex here. Joined, of course, by my co-host, Ilya Spivak, head of Global Macro. Ilya, happy holiday, should I say? It was a big macro release day.
It was, and the markets responded as one might suspect. They looked at the numbers that were basically as expected and said, what have we learned here that wasn't new? And that was probably the best possible outcome.
Choppy two-way price action. The headline goes up. The core comes back in, net on net. You see mixed equity markets. Of course, it is Wednesday, so in a few moments, we're going to bring in Dylan Ratigan. But before we do so, a quick look at here at what's going on in these markets as we wind down our trading session. We have a split performance here. S&P 500 up by 0.16%, 4472 and a quarter, just before we close out the trading day in about 20 minutes time. NASDAQ up by 0.47%, 15,377. On the downside, the Russell, led lower by the banks, off by 0.65%, 1842.9, and the Dow Jones off by 0.18%, 34,604. You and I can opine on that in a little bit, but it is Wednesday here, which means we have the pressing issues of our time to talk about with the one and only Mr. Dylan Ratigan, joining us, of course, from across the pond in fair Milan, Italy.
Afternoon, gentlemen. Afternoon. Nice to see you.
Good to see you, sir.
Always a pleasure.
And I spelled something out at the top of the show, just as you requested. CPI.
This is going to be bigger than like you understand, like David Letterman was like a global star because of that top 10 list. It didn't matter what the top. He had a hook segment. It worked. Jim Cramer. Love him or hate him with his booyah or whatever his little stupid sounds, global financial news celebrity. I have high hopes for this program just on the back of your ability to spell.
I hope that I can continue to spell well. CPI wasn't that difficult, although please don't ask me to recite the alphabet. Apparently I'm running into some trouble with that with my daughter, which reminds me, I told her just a few moments ago, Daddy's got to go back to work. And she goes, okay, please don't cry. So gentlemen, please don't make me cry on this episode of Overtime. I don't want to break my promise to my 3-year-old. In any event, Dylan, today's a good day to have you on, not just because of the CPI report, but because of some things that have been bugging me recently, kind of grinding my gears, and I couldn't help but notice yesterday that you were talking about them as well. I've seen a litany of economists out there from their ivory towers saying things like, well, inflation really has come down a lot over the past few months. How come people aren't more optimistic about the state of the economy? And yes, I think for people who are in high-paying jobs, who have some significant savings, they haven't necessarily experienced a cost of living crisis like the average American has over the past few years. While price changes may have slowed, the absolute level of prices has assuredly risen. I think you pointed out in one of your tweets that grocery prices have been flat in recent months, but what does it show? Grocery prices are still up 17% from the start of 2021. So square the circle for these people who apparently don't interact with everyday individuals, who have bills to pay, who have mortgages to take care of every single month, who have to put food on the table themselves. Why is there a big disconnect?
Yeah, I think that this is a story as old as time. So on the one hand, it's sort of like it's just always shocking to me to see it so blatantly stated. But there's clearly two classes, not just in America, but in the world. There are asset holders and non-asset holders. And if you are an asset holder and you own assets, then inflation is, if anything, is to your advantage. Debt gets less, asset values are up, blah, 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 blah. Anyway, the fact that economists, I think it was Krugman was the person that CNN was quoting, saying that Biden doesn't get enough credit for what an incredible economy he has created. And most people's relationship with the economy is in car prices, gas prices, food prices, and house prices, whether it's rent or mortgage or taxes or whatever. Housing, transportation, and food, right? Those are the real points of contact every day for everybody with life. And the cost of all of those things has risen astronomically to the, I mean, the grocery one to me is the most shocking because there's a notable difference. I dare you to try to get out of the grocery store without it costing $50 for anything, let alone if you really are going shopping. Like you can't do it. Which is not, I'm not here to gripe about grocery prices. The only answer that I can give you, Chris, to your question, which is why would they cast the portrayal of the economy in the context that they do when the reality of housing, food, gas, transport is what it is only because they are interpreting the economy through relative performance of statistics, i.e. the declining rate of growth in inflation as opposed to the absolute price level, which is idiotic. And they're interpreting other macro trends like relative unemployment and a still relatively tight labor market having nothing to do with whether those jobs are good jobs, whether those jobs are high-paying jobs, whether the average wage is up, whether that unemployment number has any validity because so many men especially have simply stopped looking for work between the ages of whatever it is, 25 and 60. Like it's a horrendous number of men specifically that have simply stopped looking for work. It is, on the one hand, not unexpected of our current political class that they would be so tone deaf and insane, but it's tragic, honestly, to see the leadership to be so disconnected.
One of those other stats that's going around right now is that last year produced the biggest jump in poverty on record, and I've seen some politicians across the political spectrum, and I say across, I mean on the far left for people who want to see perhaps Bernie Sanders be president, and anyone who's not a Democrat otherwise saying, oh, look what Bidenomics has wrought. Well, what happened to the child tax credit? How come that hasn't been renewed? Oh, in part because you have a split Congress that has chosen not to take up any legislation to push it forward. So it's interesting that we have political figures who get in the way of some of the support that could be in the economy to make sure that child poverty doesn't rise, turning around and pointing a finger and saying this is the fault of the president. But I think you're absolutely right. There is this huge disconnect between the political ruling class and everyone else. And you could say that there are, financial elitists in that circle as well who just don't get it. I think his name is Tim Gumner, I believe the name is. He was speaking at a conference recently where he was saying that the labor market needs to break because employers and employees have a disconnected relationship. Employees feel like that they are owed something by their employers, that the employers should feel lucky to have them in their stead. We need to see a doubling of the unemployment rate to fix things, as it were. And then I was reminded that this is the guy who's telling people not to eat avocado toast if they want to put down a payment for their home, which if you think about the average cost of an avocado and a loaf of bread, and you were to cut those out of your monthly spending bill every month for the next 10 years, you still wouldn't be able to afford a house in this country. So there's this almost condescension, like you should be grateful.
Yes.
You should be grateful for what you have, and you should take it, serf. And if you don't like it, too bad. This is your station in life. Yeah, how dare you try to dream bigger?
It's beyond offensive. I mean, I would do the one thing that I would say on the macro side I'll call it this super macro. A decision was made in the late 90s to try to basically use all the trapped capital as collateral for credit default swaps to then create this super liquid, hyper creditized economy that imploded on itself in 2009. They could have fixed it in 2009 and they decided not to, and instead they covered it up with money printing and a distraction for a phony reform of the US healthcare system, which then resulted in a decade of a morphinization to the entire economic system that is now worn off. And so the truth is that the inflation we're now experiencing and the massive disconnection between the wealthy and everybody else that we're now experiencing, that was a policy decision that was made as the resolution to the financial crisis in 2009. And the beautiful thing for the political and financial class for that solution is it's such a delayed reaction. The media is so incomprehensibly incompetent at the same time that the political class is so incentivized to simply blame their opponent for any problem at any time. And honestly, the entire political class has no idea what I'm even talking about. They're so incompetent. But what we're really looking at is the fallout from a horrendous solution to the financial crisis in 2009. And the financial crisis in 2009 was nothing more than a massively misguided policy that was laid into effect in 1999. It's like watching a multi-decade slow motion annihilation of 90% of the economic prosperity of 90% of a country using super macroeconomics. And it would be infuriating if it, but the why bother getting it in, like, who are you going to be mad at?
Yeah,
you said this, that the bill always comes due, right? The bill always comes due.
It does always come due. Of course. I mean, there is, not to be cheeky about it, but also to be cheeky about it, there is now a bubble in books about the cycle. Dalio just put out like several in a row. Howard Marks just put his stuff back into rotation. It's starting to really get a lot more attention. It's because people want to read about what this is, because things like this don't typically happen in people's lifetimes. Very, very seldom do you get one of these big credit cycles to actually implode in a lifetime and then build back up and then implode again. But what we're witnessing here, I mean, it's not shocking, to Dylan's point. The ingredients to this have been building for the better part of 40 years. You were never not going to have inflation return. It's been in remission basically since Volcker killed it. And then we pulled all the levers to bring it back. Now, of course we did. And of course there are political levers that we pulled. I mean, deglobalization is one. What we've seen with the trade war with the previous administration and with the deglobalization that's being pushed now by this administration, though there is now a very popular constituency for it. You almost can't even blame the politicians, because the constituency to backlash on globalization is right and it's left, and it's not just here. It's all over the place. But to put globalization in reverse is to make things more expensive. If globalization makes things easier to traverse borders and brings down the cost of business, doing the opposite does the opposite. There is, of course, still a ton of overhang on supply chains from COVID, although that's easing. It's getting better. But with China having reopened a year and a half after everybody else, and that being the big value add center in the middle of the global economy, things were always going to be rocky, because if they're offline, who's doing things? Who's doing that value add? So that was always going to be something that took a while. There was certainly, to your point, Dylan, a weird kind of overstaying of the response to the 08-09 crisis, because to print money then made perfect sense.
Was the only way out.
Made perfect sense in the world, because
your only
if what you had was a liquidity crisis, and the Fed basically said, okay, so we're going to take your illiquid things, we're going to give you cash because we don't have a funding constraint, and we can sit on these illiquid
unlimited
things.
Depth in our pool. Yeah.
Yep. And we can sit on these things forever. Surely not everybody's going to default on their mortgages. So when the crisis ends, these things will come up in value, and they ended up making money on them and paying that back to the U.S. taxpayer with positive P&L. This is
but
good.
In doing that, but again, my whole thing, this goes back.
Yeah.
it's not about the solution. The only solution was to pull the ripcord and open up the coffers and do what you just described.
Sure.
But to do that without any structural reform in capital in this, like it's like if your child runs, if Chris's daughter runs wild and does whatever, eats all the Snickers bars and now is sick to her stomach because she had 44 Snickers bars. Like, of course, Chris is going to do whatever he needs to do to try to, make her feel better. But he's also not going to set her back up with a bag of 44 Snickers bars right after he makes her feel better and be like, don't worry, next time you have Snickers bars, I have, Dr. whoever here. Like, you pull the liquidity ripcord and you must then admit, oh, this structure didn't work. It failed.
Yes.
And while we are too big to fail now and we're going to run the liquidity pool, we're not going to pretend this is a working system. And instead, they're like, no, we are going to pretend this is a working system. And instead of any sort of acute pain for those who could most endure it, which is the bondholder, the shareholder, the board member, the bank CEO, we're going to do chronic pain for those who can least endure it over the next 20 years.
Exactly. I mean, exactly.
It's
so instead of saying, here, we've made your illiquidity liquidity, you don't have to fail now go and fix this. But we've said, okay, well, now there's all this money out here, and we're just going to keep it though the liquidity crisis is over. That's going to feed financial assets and create this paper wealth disparity where maybe the quality of life isn't even that materially different as the paper wealth disparity suggests, but the gap is huge. Absolutely. Like, the actual money wealth gap in dollar terms is giant, and it's because assets are astronomically inflated by a giant Fed balance sheet.
What I don't understand, Chris, is why the financial markets are so robust.
53% of Americans own financial assets, right? 90% of the wealth in the financial market is held by 10% of individuals in the country. So, this is part of the disconnect.
My point is, it's like the financial markets is also, the stock market is almost as detached from the real economy as Paul Krugman.
It assuredly is. And that's a big problem. I mean, you turn around and you say to someone, oh, the stock market's up. Literally, there's a coin flip if that person is actually involved in holding any financial assets at this point in time.
And there's 99% if they do own financial assets, it's some third-party disintermediated structure that has no relationship with any piece of information in their lives other than they have a 401k or some whatever.
If they're lucky to, because we got rid of pensions years ago, those are on their way out the door. There was a paper written years ago by this guy named Chris Cole. His fund shut down recently, but his concept was that volatility can never be eliminated. It's only transmuted across time and across spaces. And last year, in a conversation with a former Tasty personality, Victor, he was bringing this up, and I was saying that it's not just about volatility, it's really everything in society. We do all these massive liquidity injections in 2007, 2008, and instead of having volatility in the financial system, what happens? It transmutes into volatility in the political arena. You get the Tea Party movement. You get the rise of, we can call it more extreme political movements, not just in the United States on the left and the right, but in Europe as well. You see this in Germany with AfD. You see this with, the National Front with Marine Le Pen. You see Brexit come about in the UK. Meloni now is your prime minister. Some people would consider her to be an extremist in Italy.
Well, she came, but the interesting thing, not to go into an Italian political discussion, but what I found most interesting about Meloni, because she surely arrived with all the trappings of right-wing extremism, but she has ruled towards the middle. She's been, her popularity has increased. And and honestly, her global relevance has increased because she's seen as a straight shooter as opposed to an extremist, which I didn't expect. And I have most of my Italian friends are like, listen, I wasn't that excited when this happened, but a year on, I like her better today than I did a year ago, is a very common comment, which I think is.
I'm not surprised.
Honestly,
that's the way to govern. That's how you govern.
Yeah. But that's,
Right.
I think that's not that's an exception. I think everything you're saying is obviously true. And the point is that the economic risk was transferred to the political theater. And that the interesting thing to me is that the stock market, like forget how many people own stocks. 10% of the population has any real relationship with the stock market consciously. And of those 10%, 1% have most of the capital. The economy is active enough there's enough rich people to support the financial markets, and really the rest, the same way that no one cares about the poor people in India or the poor people in China or the poor people in Peru, no one cares about the poor people in America either, including the stock market. And this is, so I'm honestly sort of, because my instinct is always to think like mortgage rates, grocery prices, gasoline, whatever. I'm like, the stock market cannot possibly continue at these levels in the face of housing this and blah, 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 blah. And Elias and I talk about it. And I know that you disagreed with us the last time we spoke, Chris, and you might be right. Honestly, like that there's enough and until there's a real political drama of some kind, which one could argue both Trump and Biden are, creeping towards a hell of a drama here, but there's still not enough, unfortunately, that really the stock market's fine in its own self-contained universe.
For me, it's all about the cost of money when it comes to stock markets, and they're elevated because for the longest time until this pandemic and until this tightening cycle in its wake, money was really, really, really cheap. And it was really, really cheap for a really, really long time. We had 40 years of perpetually falling interest rates, falling inflation that really didn't culminate until the start of this pandemic, because the one thing we didn't see with all of the monetary expansion after the 2008 crisis was inflation, which was, to me at the time, something that made all the sense in the world. There were people running around going, well, you print so much money, you're going to have inflation. And it seemed obvious that you wouldn't, because if you've destroyed so much liquidity and now you've just filled the hole you've made, you're not really creating new money. What you're doing is you're transforming an illiquid form of money into a liquid form of money. So
I agree with that, but I would just, the only thing I would put this sort of side piece to that.
Yeah.
Not that we're trying to do a financial historical, whatever we're doing here.
Sure.
Yes, to everything you said, but soft commodity prices rose substantially at that time.
Yes, they did.
So again, it's just whether it's the idea of transferring economic risk to political theater, which Chris just hit on perfectly, or taking the currency inflation and transferring it to the soft commodity markets, which was then supportive of the overthrow of the government in Tunisia, the whole thing in Square in 2011, because at the margins, real political revolution happens when people can't eat, can't afford.
Absolutely.
Right?
So this was what happened when wheat went up last time.
Arab Spring.
We got the Arab Spring.
But I would argue the wheat inflation was a direct result of the American solution to the financial crisis.
Maybe this I've not looked at. Just looking at headline CPI and looking at it internationally, it didn't really seem to go up. We've had central banks battling with deflation risk basically for 10 years after that crisis, maybe a little bit longer. The ECB was still on negative rates and a QE effort before COVID, just right on the eve of COVID. So, and of course, CPI is a basket, and there's give and there's take, and some things add and some things subtract, and some things matter to regular folks like soft commodity prices because that is going to feed into the grocery bill, and some things don't matter nearly as much. So looking at the breakdown here, and to both of you, the points that you guys have made, there seems to be, let's sort of give as much credit as we can to people's good intentions, though they may not be actually very good.
Half the hell is paved with good intentions, Mr. Spivak.
there's clearly a misunderstanding of what inflation is for people who say that, oh, well, it's been coming down. No, the rate of increase has been coming down. That's not anything to say that it hasn't been increasing. It has, dramatically. And so what we see here, I'm sharing a chart here, that blue wedge is food. So yes, it hasn't been growing recently as quickly as it was growing, let's say at the beginning of this year or at the end of last year. We can see the area has narrowed some. But it was barely a sliver before COVID.
Right,
and
but
clearly,
what gets lost in this graph is that this is a graph of the rate of growth.
And this is the rate of
change. This is not a graph of the absolute level.
Absolutely.
And so it's not like prices are coming back down.
Exactly.
It's that prices are not going up as fast, which is just why the whole thing is absurd.
Exactly. The whole thing to note here is the entire chart exists above zero.
Yeah.
Which means like the whole thing.
The whole thing.
With the possible exception of a little sliver of energy at the bottom there, because Russia appears to be absolutely determined to flood the market with natural gas. Other than that, the entire chart's above zero. None of this is prices going down. All of it is gradients of prices going up at different speeds. So none of the increase in
and everybody knows, I'll interject, that there's sort of this fantasy optimized world of, we'll call it 2% rate of growth in prices as tension to drive investment and engagement and consumption, and it's like water tension pulling the economy forward. Anyway, the point is, to your earlier question, Chris, it is Joe Biden. Joe Biden's only chance to get reelected is Donald Trump. There literally is nothing going for this man or that political party other than the fact that his opponent may be incomprehensibly worse than him, depending on the day and who you are and how you look at it. But I'm so interested in transitioning to a conversation in a world that lives in the affirmative, where I can speak to that which I would want, or that which I can create, or that which I desire, as opposed to a dispositive universe, which is entirely, constantly, and perpetually based on the thing that is least offensive, or that is which of the two horrible things is less awful.
The lesser of two evils.
But it's just an incomprehensibly, it is such an insulting way to navigate an existence.
I feel that so much, and this is going to sound kind of cheesy. I've recently, there's two things that stand out in my mind as a juxtaposition this week from a personal perspective. I already shared my anecdote on, my own family's experience with 9/11 the other day when we dunked on DraftKings for their ridiculous never forget parlay bet, which if you missed Monday's segment, feel free to go back and watch. But I was reminded of this Hunter S. Thompson quote that he said in the week after 9/11, which I think is worth sharing here because it was very prescient at the time, especially when we look back to see how things have evolved recently. He said, and this was written again the week after 9/11, quote, "We are at war now, according to President Bush, and I take him at his word. He says this war might last for a very long time. Generals and military scholars will tell you that 8 or 10 years is actually not a long time in the span of human history, which is no doubt true. But history also tells us that 10 years of martial law and a wartime economy are going to feel like a lifetime to people who are in their 20s today. The poor bastards of what will forever be known as Generation Z are doomed to be the first generation of Americans who will grow up with a lower standard of living than their parents enjoyed. That is extremely heavy news, and it will take a while for it to sink in. The 22 babies born in New York City while the World Trade Center burned will never know what they missed. The last half of the 20th century will seem like a wild party for rich kids compared to what's coming now. The party's over, folks." End quote. All of the problems that we feel as America as we know it today, in our economy, in our personal lives, in our professional lives, if it's the fact that social media has made us more distant, that we have people screaming at us, telling us what to think, what to feel, what to believe, who to vote for, what we need to consume or not consume. It's a stark juxtaposition from the world that I remember growing up in. Like the 1990s, that was in hindsight, that was Pax Americana. And that world is never coming back, it feels like, because we live in such a negative environment right now. And I say the juxtaposition that I had this week is I'm playing this new video game, Starfield, where humanity has traversed the galaxy, has settlements in all sorts of different systems. People are in far-flung regions of space, building a better world, building a better universe. And that seems like it's almost a joke. It's pure science fiction that we could never come together to build a better economy where the average person is able to literally reach for the stars, right? Not just traveling there, but achieve the things that they want to achieve in their life, because there's always something being thrown at us that gets in the way, that makes life more expensive. That means that we have to focus on our time and our energy of just digging out of a hole that it doesn't matter what we do. It just continues to get deeper. And that's one of the reasons why I think more and more people, we hear all this complaining about zero DTE options in the market. You know, why are these young people gambling? Well, what other choice do they have? How else do they expect to climb the economic ladder if not to win the lotto itself? They have to go into the stock market and treat it like a casino of sorts, even though that's not how I view zero DTEs or Anton or Tom view zero DTEs. The meritocracy of the American dream it's really faded, and it's heartbreaking, and it's almost difficult to comprehend that. Is my daughter's life going to be that much more difficult than mine was? And granted, I've had a pretty easy life on the grand scheme of human history. But
I guess the only thing that I would say to you is that the world is in the rate of change, as everybody knows, is the highest it's ever been. That the rate of transition is the highest it's ever been. We're at a particular moment that's really obvious to everybody, because you have all of these sort of rate of change aspects and indications about, which I won't list the things because everybody can create their own list, that is in an incredible stress against a bunch of 80-year-olds who run the government.
Yes.
Okay, so like you're literally dealing with we know what we're dealing with. Okay, everybody's seen Feinstein and McConnell and Biden. I mean, it's laughable. That's not going to last. That is definitively not going to last. And I do believe that on the other side of the transition, as people realize that if they choose more affirmative points of attention in their lives for not so much what they want to have or what they want to get, but how they want to be and who they want to be, more a state of being than a state of having and acquiring, which part of what I think all this is, as people feel like they can get less and they can have less, that naturally, while it creates all sorts of anxiety and stress and all those things, it also ultimately leaves one path, which is focus more on who you are and how you feel and what you be, and less on what you can get and what you have. And that transition to that change in that point of attention away from what I can't have to what I do have and what I can be will then actually transition to the abundance to the material abundance. Like the path to the material abundance is the surrender from the pursuit of the material abundance and the return to the presence. And that the stress of the transition is in part pressing everyone in that direction, whether they like it or not. And it's going to work. I'm with Sosnoff on the basis of positive drift, not just in the markets, but in life. And we're just at a moment of extremely brutal transition that will pass.
So are you a fourth turning kind of person?
The immigrant card here.
Hold on a second, Elliot. I just want to address his point there. So are you like a fourth turning kind of person? There's this theory out there from Neil Howe and William Strauss that Western civilization goes through these, 4 cycles: renewal, stability, decline, and crisis. Are we in that fourth episode? Are we in that stage of crisis right now?
I mean,
there's light at the end of the tunnel?
I'm not familiar with the doctrine that you're speaking to, although it resonates with me. And yeah, for sure we are.
Yeah.
And from crisis will be renewal. Let me hear your immigrant story, Illy.
Yeah, I mean, I'm just gonna have to be a wide-eyed optimist here and pull the immigrant card, because I wasn't born in the U.S. and it is definitively better than every anyplace else on the opportunity scale, in my eyes. It is definitively preferable to almost anywhere else you can be in the world today. Still, almost anywhere. Not everywhere. There are places that have comparable things that are available on the opportunity scale, and some things are better, for example, when it comes to healthcare systems or other systems.
Childcare.
But
healthcare, I mean, come on, healthcare is
that's a big
America.
one, but I will take hours.
But we're not going to rain on your parade
any day.
We're not going to rain on your parade. Please carry on.
I will take U.S. healthcare over Russian healthcare and almost any other systems other than maybe a handful of other developed world ones any day. I've experienced Russian healthcare. I don't recommend it. So
I've experienced it and had a very positive experience, but it was only a year or two ago.
So the notion that that what's happening now is necessarily the product of bad policy alone, I think gives the policymakers too much credit. We're looking at a generational and a demographic shift in a dynamic happening around the entire world at the same time. The aging of baby boomers is happening everywhere. The removal of those people from labor forces by smaller generations that can't sustain social safety nets and economies and populations as they've grown because of the absence of that labor, and because the money that these people have saved will now start coming out of the markets because they're retiring. So they need to spend that money down now. So liquidity is going to start to get more scarce. And financial assets are going to stop having this perpetual liquidity lift. That's happening everywhere. That's an impairment virtually everywhere. And in the U.S., it's
Hang on. I thought this was an immigrant's optimist tale. How did we get to
well, and so
I'm a little confused. I'm sorry.
Well, and so when you look at the U.S. from my perspective, I don't see quite as dire of a situation and quite as hopeless of a setup as Chris paints. I see the same sort of things that are hampering everybody everywhere at the same time. But to your point, I see actually quite the hopeful way forward, because this becomes a forcing function for change. And we are, in the U.S., probably the most adept at nimbly having that forcing function have effect, or nimbler than elsewhere.
And the U.S. has better demographics than
much better,
Europe and
much better,
and all that. I mean, if you're going to be long anything, I would be long a U.S. Mexico combo.
Yeah.
Well, if to address your point, Ilya, I am an optimist, right? One thing that I told myself over the years, and something that I share with people, is when they, get it down into the feeling bad about their situation. There's 8 billion people on the planet right now. I think this is a Buffettism, right? Put all of those 8 billion people, you freeze time, everyone lives forever. Mm-hmm. We turn them all into marbles and they get thrown into a jar. You shake up the jar, you have to pick a random marble out of that jar, and that becomes your new life for all eternity. Would the average American take that gamble? I wouldn't. I don't think either of you would either. Now, granted, we're in a very privileged situation. We've all been very lucky and fortunate in our lives.
But I mean, I've seen that discussion. I don't know of anybody, even it's like, you'd be shocked at how many, if people that are in much more challenging circumstances than anybody in America, for whatever their complaints. People, it's the devil, But I agree with you.
Sure. Yeah, and it's one of the reasons why I hate the negativity. That I said this the other day. I was out with Jamal and a buddy of mine from college on Friday night after we had our team dinner, just to have a few beers and catch up. And I couldn't help but walk away feeling eternally optimistic about how things were going. Now, that may have been the beer speaking, but for all of its warts and issues, I'll speak in Spivakism. America's already great. We have our problems, but we have the capacity to change and grow and learn from them. We just happen to have, to your point, Dylan, a bunch of octogenarians who, instead of spending their last decades enjoying their time with their family and looking back on a life well lived, they are clinging on to power in hopes of building some sort of legacy, which the moment that they're gone will absolutely be tarnished. And most people will, I hate to say it, be glad that they're no longer in control.
I mean, I don't know if you look at Mitch McConnell and Dianne Feinstein, I'm not sure that either of them even knows where they are. Now, with
sad state of affairs.
With that said, I'm short the NASDAQ.
For me, if I'm getting short the NASDAQ, it's simply to hedge off the existing long equity positions I have, because I believe in American innovation, and I've said that before, and I'll say it again. But we've started to jump into a political conversation here, and I know that rules are you don't talk about politics and religion and taxes with your friends and family, but this is overtime, so those rules don't apply to us. Dylan, there was some news this week that the impeachment inquiry into Joe Biden is picking up. Now, whether or not that has any teeth to it because of a 2020 DOJ opinion written under then President Trump, effectively saying that you can't proceed with an impeachment inquiry unless the House votes on it, and there hasn't been a vote. We'll leave that to the political scholars elsewhere. But now we're heading into the real teeth of the election window, right? Primaries are coming up in a few months. There's the potential for a government shutdown now. The economy could be tipping over towards recession next year, some say. Are we now just in a situation where we have outright political chaos and dysfunction, and that's only going to become louder and louder and louder, and perhaps even more of a problem for markets moving forward?
I mean, yes to everything except for maybe the markets. Here's the political reality. Like, forget what they hear on TV, forget the parties, blah, blah, blah.
Sure.
The vast majority, remember, half of the eligible voters in America don't vote. Right? So voter turnout. So that tells you half the people don't think it's even worth voting. They're so alienated from both parties and the political process, they don't vote. Within those who do vote, less than 10% of Republicans and less than 10% of Democrats actually select the candidates in the primaries that you get to vote on.
Sure.
So what is represented to you as the representation of American sentiment, of the American people, the Democrats, the Republicans, Joe Biden, Donald Trump, whoever, Kamala Harris, Nikki Haley, pick them. Every single one of them represents an extreme minority of the population, sentiment, and voters of the United States of America. The political system, much like the stock market and the economists, is in the American people are generally, the majority of Americans are completely alienated from the entire political process. So the discussion becomes a discussion that is entirely theoretical, because the majority of people feel that no matter what happens, impeach, don't impeach. So in other words, I guess I'll take it to your question. The impeachment is meaningless. Everybody expects that every president is a criminal. Was Joe Biden doing favors for his son who was collecting millions of dollars? Probably. Did Donald Trump hook up Jared Kushner with $4 billion for a hedge fund out of Saudi Arabia, or whatever the number was? Most likely. Did Bill and Hillary Clinton put themselves in charge of billions of dollars of so-called charitable money in exchange for Hillary doing State Department favors? Most likely. Is it an accident that Barack Obama lives in a front row kingpin Martha's Vineyard, private equity managing director kingpin house on a $200,000 a year presidential or $400,000 a year presidential salary and a Netflix movie deal? So the whole thing has lost credibility. The same way that the evening news used to mean something, or the front of the Wall Street Journal, like the crisis that goes to the crisis, Chris. So will Biden get impeached? Probably. Will he be convicted? Most assuredly not. Has the threshold for impeaching any president gone down? Yes. Are the Democrats complicit in lowering that bar? Yes. Did Donald Trump deserve to be impeached? Probably. Did he deserve to be indicted? Probably. But the point is that the degradation in the whole process is such that the net result is total alienation and more people who simply don't participate.
Fun.
Yeah, good times.
I mean,
I guess
I think you mean FUN.
FUN.
Yes, FUN. That's right. So, I mean, I look at this and, I mean, all of those things probably have some element in them. And so you look at it and you go, okay, well, from a market's perspective, is this a material difference from what we know historically, where political elites bend the rules and
to take money in big houses? Not
right, and the train keeps rolling.
Yeah. I mean, William Jennings, the last time voter turnout in America was in like the 80 or 90th, like where everybody voted, was in the 1890s. And William Jennings Bryan ran a third-party candidacy.
Silver, yes.
And the Democrats made a deal with him and said, we will internalize your coalition, which was like a third of the voters, and we will adopt your whatever your top three principles are, which really had to do with the currency and collateral in the currency and representing the farmers and all the commodity, all that stuff. And then, so William Jennings Bryan made that deal. Picture him as like the Bernie Sanders, if you will, of that moment, although politics were different, but a meaningful third party, or Ross Perot, I guess. And then after the Democrats made that deal and the Democrats won that election, they did not keep any of the promises to William Jennings Bryan or his constituents. And voter turnout went from 90% to 60% in every election, between 50 and 60% in every election since. Like they basically, you know, it's like once I completely humiliate you and alienate you in public, and then I say, no, come back on Tasty Trade with me and we'll talk about the stock market. Like you're just not going to do it. And that's basically what the American political leadership did to the American electorate in the 1890s.
Yeah,
If you really wanted to solve the electoral issue, you would do ranked choice voting and mandatory voting. Mandatory ranked choice. We have no choice. You must.
Yeah, Australia has compulsory voting, and I see their voter turnout, and it's like, oh, that's the dream.
And we have ranked choice voting in California now, and it's looking much better.
Yeah, ranked choice voting is such an easy, but again, the fact that there's such resistance to these very low, easy to do things is because for those who have power in the Democratic and the Republican Party, the fact that most people don't vote is in their interests because it allows them to preserve their power.
Well, and to your point, right? Voter turnout has been basically this since, let's call it, the turn of the previous century.
1896, since the election of 1896.
Right. So if we look at this from a kind of, does this impeachment or that impeachment or the level of yelling between the parties or the level of vitriol on social media between the camps that's likely to rise with now one side wanting to impeach the other again, and then the two sides yelling at each other, is that from a market perspective and from a sort of status quo altering perspective, in my mind, it doesn't alter anything or materially do anything, because I mean the level of vitriol is not different than it's always been in American politics, and all you really
the system is operating at its median level of degradation.
I mean it's basically
it's just more of it.
So as long as the Fed continues to be a credible steward of interest rates, and absent something really dramatic. That continues to be the case because there's no alternative to the dollar as a currency of transaction. So that stays. So absent that, I don't think this means much of anything unless, and this is the big kind of the star in the corner, one of the parties is actually forced to change candidates at a last minute thing. And then the markets maybe get a little bit
I don't even think that. I don't even think that. I think Joe Biden could get impeached and convicted for explicit sale of state secrets to whoever.
And beat Donald Trump. I agree.
But I'm saying, and the market wouldn't care.
Right.
Like
Perhaps
the market. What's that, Chris?
I say perhaps not. I mean, at the end of the day, you talk about how only 50% of people in this country vote, and about 50% of people in this country own financial assets. And I would assume if we were to do a Venn diagram, that is a fairly significant crossover, and at the end of the day, you have to assume that this is what is wanted by the people that are engaged. Because nothing gets done, nothing changes. That means the existing power structures stay in place. The people with the money have the money. It doesn't go anywhere. The people in political power stay in power, and they continue to gild the path for financial asset inflation that keeps the wealthy people happy and continuing to vote for them into their positions of power. So it is a gigantic circle that goes round and round and round. Unfortunately, overtime is out of time here on Wednesday. Rumor has it.
As a young lady once said, let them eat cake.
Let them eat. I was thinking of that earlier when you were talking, Dylan. So I'm so happy you read my mind. Rumor has it that Dylan will be back tomorrow as well. He may be appearing here on Overtime more often moving forward, which would be a very pleasant surprise. And we could have more of these enthralling conversations moving forward.
Or we're all getting inspired. I think we're supposed to be talking about decaying implied volatility 45 days out and standard deviation moves, not the French Revolution, but we'll find out together.
So
of course,
you're going to rue the day. You're like, we never should have let Radigan join. We were doing great, talking about the charts, and then we let Radigan come on, blathering on about Marie Antoinette.
No such thing. To follow Dylan on the website formerly known as Twitter, you can follow him at Dylan Radigan. He's also on Truth or Skepticism on Wednesdays. That's 2 p.m. Eastern, 1 Central Time with Tom. You can follow Ilya, of course, coming up next on Macro Money every Monday through Thursday, 5:30 Eastern, 4:30 Central. He's also on First Call Sunday evenings, 5:55 Eastern, 4:55 Central. Follow him on the website currently known as X at Ilya Spivak. You can follow me there at CVecchioFX. Futures Power Hour is every Monday through Friday, 1 p.m. Eastern, 12 Central Time. Here on Overtime, 4:30 Eastern, 3:30 Central, of course. And let me explain Tuesday mornings, 9:40 a.m. Eastern, 8:40 a.m. Central. Yesterday, we talked about why CPI would not matter for these markets, and indeed it did not. Go listen in to see how Tom and Tony were thinking about playing the bond market here. Of course, they updated that commentary today after CPI. In any event, like I said before, Overtime, we're out of time. See everyone tomorrow, same time, same place. Until then, good luck trading. Up next, Ilya Spivak himself with Macro Money.
See you there, folks.